Well, hello and welcome. My name is Brian Kaplan. I'm editor of The Banker magazine, and we're at the Sheraton Park Lane in London for what is going to be the Banker's 11th Annual Investment Bank Awards. Clearly, we're holding it at a difficult time in the markets, but you know, the awards are about recognizing innovation and strategies in investment banking, and those can come up at any time. So I'm here with Paul Wallace, who's one of our senior capital markets writers. And Paul, you were much involved with the judging this year. What were the standard of entries like, you know, in terms of the content and the kind of innovation and ideas in them?
The standard of entries was very high this year. It was a bit different in the sense that for banks it was quite a tough year for them. For some of the categories, if you take initial public offerings, for example, it wasn't a case of banks putting in entries about the biggest deals and the best deals, because the market's been very suppressed in the last 8 months or so. So it was about banks putting in entries of deals that were quite innovative. For example, Bank of America Merrill Lynch, that won the IPO award, spoke about a deal for a Latin American company that was structured in such a way that European investors would buy it. And this was one of the first Latin American deals sold to European investors.
I mean, that's interesting, because one of the interesting things now is that, you know, the international nature of the capital markets and how we're seeing, you know, many innovative deals done in emerging markets these days. Has that been reflected in the kinds of entries and the awards we made this year?
Yes, there were plenty of the most innovative deals came from emerging markets, whether it's Asian IPOs or Asian M&A deals that featured in the entries. So emerging markets were very prominent this year.
And you also, apart from your capital markets duties, you also cover Africa. You know, are we starting to see capital market developments and innovations in Africa now?
Yes, and it was won. The African Award was won this year by Rand Merchant Bank. It was the first time they've won it. And they were actually given it in large part because of their push into sub-Saharan Africa outside of South Africa. They've always been a big player in their home market, but in the last few years they've really been trying to expand elsewhere. And when we spoke to them, they said that there was a scramble for Africa in the financial services market. So it is, it's still starting from a very low base, but it's a market where over the next 20 years, say, banks feel there are huge opportunities.
Okay, thank you very much. So a scramble for Africa is obviously a very sort of historically resonant phrase. But you can see what's happening now in terms of innovation coming from all parts of the world. And so even though the gloomy outlook is around us all, particularly in London with the problems in the Eurozone, we're looking forward to a very interesting night where we reward creativity in the markets. So hopefully everybody will have a fantastic evening, and we're looking forward to it.
The most innovative boutique. Shortlisted just one house, Evercore. The winner, not for the first time this evening, is Moelis & Co.
Hello, I'm Paul Wallace of The Banker magazine, and I'm here with Mark Adey, the head of Europe, Middle East and Africa at Moelis & Company, which has won our award this year for most innovative boutique investment bank. Mark, boutique investment banks have thrived in the past few years and have won a lot of market share from bulge bracket firms. Why is that?
Well, I think they benefit from being independent, first of all, and free from conflicts that many of the bulge bracket proposition have to tackle. Secondly, I think they're pretty flexible and nimble, and we would think also that we're pretty innovative. And if you combine that with hiring high caliber people, we think it's a pretty powerful combination.
Is it a disadvantage being a boutique bank that you don't have a balance sheet that you can use to finance, say, mergers and acquisitions for clients?
Well, from my point of view, it's actually a positive advantage because we are free from all the inherent conflicts that those lending banks, equities and fixed income trading houses have. And it allows us to focus exclusively on the provision of the correct advice. So from that point of view, I think it's a material advantage actually.
Moelis & Co has done a lot of hiring in the last few years, and it has expanded into regions such as Asia. Do you expect that your hiring will continue for the foreseeable future?
Yes, we're hoping to continue our investment program to continue to attract high caliber people. We'll be investing in Asia, in other geographies throughout continental Europe, and broadening and deepening, I hope, our commitment to industry specialization. We see this as a period of significant opportunity for us to continue to build a strong franchise of relationship-orientated individuals.
What opportunities do you think the recent market jitters over the last 2 months present for a bank like Moelis & Co?
Well, standing back a bit, I think obviously the last 6 weeks has introduced a further degree of uncertainty in the market, and I think that will mean that mergers and acquisitions will continue to be relatively challenging, despite the fact actually I think corporates globally are in remarkably good shape. We hope to continue to participate in the merger and acquisition business and hopefully increase our market share. But equally, as you can imagine, particularly in Europe, this disruption in the banking sector is going to lead to significant picking up in the level of restructuring activity. And you may know that we have got, I think, quite an interesting balance of both merger and acquisition capability combined with restructuring capability, as well as a risk advisory business. And the combination of those three, we think, are actually increasingly relevant as this period of uncertainty increases.
Mark, thank you for that.
Thank you, and it's a privilege to have won the award.
The most innovative investment bank for corporates. We've got 2 houses shortlisted. They're HSBC and BNP Paribas. The winner, I think for the 3rd time this evening, Barclays Capital.
And with me now is Sam Dean, co-head of Equity Capital Markets at Barclays Capital. Sam, global equity markets have been severely hit in the last 2 months. Do you expect the volatility to persist at least until the end of the year?
I think it's definitely going to continue until the end of the year. I mean, if you think about it, if you go back to February 2009, which was kind of the market lows post-credit crisis at that time, we had a strong recovery in equity markets, but throughout that period of time, so for the last 2.5 years, we've consistently had bouts of volatility during that period. So actually for my business, for Equity Capital Markets, for the last few years, it's actually been a very tough time to execute transactions because we've lived through those periods of volatility. Obviously, the last few months, it's been probably the worst period throughout that period. And I think the only catalyst to come out of that volatility in the short term is if we do see some sort of resolution to the European credit sovereign crisis that we're in at the moment, and if there is some kind of solution that the market views as credible, we'll certainly get a market rally and we'll probably get a reduction of volatility.
Is the Eurozone crisis the be-all and end-all for investors at the moment? Is that the main thing?
Well, it's the be-all and end-all. I'm not sure it's the be-all and end-all, but it clearly dominates investor thinking at the moment because it has a huge impact on the macro economy, which obviously is the key driver ultimately of equities, and it has a huge impact on the financial sector in particular, which is a big part of the market. Now, I think if you ask different investors, many actually do believe that equity markets at the moment are attractively valued, but it's very difficult for them to put their money to work and make big investment decisions in an environment where there are macro political and macroeconomic factors at work that are going to drive sentiment in the short term.
Is the initial public offerings market effectively shut at the moment?
Do you know, I don't think the IPO market is ever shut. I just don't believe that. There are always investors looking to make new investments, including in IPOs, and I think there are always prices at which transactions are possible. It is incredibly difficult because the IPO process takes place over a period of time, usually a 3 to 4 week window from start to finish. And right now, no one is smart enough to know what markets are going to do during that 3 to 4 week period. So I think the only types of deals in this environment which are possible are for very, very defensive companies, which investors do look for in the current environment. Maybe very high growth opportunities, which investors will always look at. And I think perhaps small, well-priced transactions for issuers who are prepared to take the terms that the market would pay them for at the moment. But the vast majority of issuers that we work with would prefer to wait until markets improve.
What are the main things that banks can do to help their clients overcome this volatility at the moment and raise equity if they need to?
Well, I think over the volatility is, as I say, it's probably going to stay. So we have to work around that. I think the first thing that we have to do is just educate our clients. I mean, most corporate clients are really confused about what's going on. They don't follow the markets every single day, and so the first responsibility we have to them really is to make sure that they're informed. In terms of those that want to tap the market, it's really all about timing in a market like this. Yeah, ideally you want to be in and out of the market as fast as you can, and you want to hit windows of opportunity. And there are windows of opportunity. Just in the last few days, we've had a couple of decent days. Tomorrow could be a terrible day. So timing it right for the particular situation is probably the most important thing.
The most innovative investment bank from Central and Eastern Europe. Shortlisted, we've got VTB Capital, well done. But the winner is Wood & Co.
Good evening, welcome to the Banker Investment Banking Awards 2011. I'm Philip Alexander, the finance editor of the Banker magazine, and with me here is Alan Apter, the chief executive of Wood & Co, which won the award for Most Innovative Investment Bank from Central and Eastern Europe. Good evening, Alan.
Good evening.
The main reason for this award was the bank's expansion out of the Czech Republic to become a regional investment bank. What have been the main achievements and successes of that move over the last year or so?
That expansion is off to a very good start, as evidenced by our continued dominance of the Czech market with approximately a 25% market share, but importantly, the growth of our market shares in Poland and Hungary, our other two core markets in the region. Our market share in both markets has more than doubled. We're now at a 5% share in Warsaw and about a 9% share in Budapest. We were able to attract an excellent team of recognized professionals from the region and working with the region in both research, sales trading, and corporate finance, who have enabled us to make those gains. I would say the other achievement is that we've historically enjoyed a very good business flow from the broker community. But while we'd like to maintain that, we also would like to significantly expand our end client base, and we made great progress with that this year, more than doubling our end client business. Other big achievements of the year were in our first penetration of the Warsaw IPO and SPO market, where we had done, over the past year, 8 transactions, both IPOs and SPOs. Some of the large ones like JWS, the coal company, and the WSE itself. Also middle market companies like Crook and Toya. So we're pleased with that. And we also, as further evidence of our innovation, were involved with the first listing of a foreign company in Istanbul.
And what have been the major challenges that you faced over the past year or so?
Well, the challenges come, like for all participants in the markets, with the markets themselves and the economy. The key for us is strong growth in Europe, and particularly in Germany, because our core markets, Poland, Czech Republic, Hungary, send so many of their exports to Germany. So obviously that is now an area we're monitoring, and also these market conditions are not ideal. I'd say other challenges are cost control during an expansion like this, when you're hiring a lot of people, putting in a lot of new systems, so we need to be very attuned to that as well. And the other major challenge comes from the competition, where fee compression across our business lines, continues to show itself.
And in the coming year or so, what are your expectations for the best opportunities for Wood & Co, both in terms of geography and in terms of product lines and business segments?
I would say in the brokerage area, it's continued penetration of the end client base for us, particularly in the UK, where a lot of GEMS funds are based, and in the US market, where there is a lot of opportunity. In our view, it's really an underbroked market from the point of view of Central Eastern European equities. Also, we see the continuing strong development of our DMA business, which is something that we pioneered for Central Eastern Europe. And we continue to maintain with very strong technological edge, giving us a clear advantage over a lot of our competitors. On the corporate finance and capital market side, assuming that the market is there to take deals, we see the big opportunity in Warsaw. Warsaw now has about 750 companies listed between the main board and NewConnect. About 40 of them are foreign, and we see a lot of interest from companies across our region looking to either list or dual list and do their IPOs in Warsaw. And while we'd like and will continue to participate in large privatizations from across the region, a clear niche we have is for the middle market companies in the region listing in places like Warsaw or other markets, where the global banks really aren't terribly interested in that segment, and the local banks aren't able to offer the international distribution that we're able to bring to these deals. In the M&A area, we're seeing an accelerated consolidation trend, both across many sectors, both within individual countries in the region and also intra-regionally. Leaving aside multinationals coming in, the real trend we see is intra-regional consolidation, and we hope to, as we have this year, take a good share of that next year.
Well, congratulations on your award, and I hope you enjoy the evening. Thank you very much.
The most innovative investment bank from Western Europe. We've got three houses shortlisted. They are HSBC, Barclays Capital, and Deutsche Bank. The winner, ladies and gentlemen, not for the first time this evening, BNP Paribas.
I'm here with Martin Egan, the UK head of fixed income for BNP Paribas, the winner of the most innovative investment bank from Western Europe. Martin, there's been a lot of focus this year, of course, around events in the Eurozone. How has BNP Paribas' corporate and investment bank responded to the challenges posed by the external environment?
Well, Phil, it's been a very challenging time, as you can imagine, really across global markets. As a bank with most of our resource based in Europe, we've very much been involved in all aspects of market activity. It's been challenging, no two ways about it. But we've done a reasonably good job because of the strength and breadth of our business model. We have a very mature fixed income business, one of the leading equity derivative businesses in the world. We're a key lender to many of our clients in the region. And we've really gone back to basics. We've looked at our business model. We're discussing with our clients the best way forward, how to approach the markets of today and potentially the markets of tomorrow, So it's really been a back to basics plan, but really getting close to our clients across the board.
And what sort of areas have you sought to distinguish yourself from the competition?
Well, despite the fact we've seen immense volatility, competition has been very intense. Breadth of relationship is key. Over the last 10 years, we've built up very close links to many of our key clients across Western Europe, and we've adopted this advisory mentality with them. And we've been really first in many ways with new solutions, because again, when you have such problematic conditions, you have to differentiate yourself. So we've really focused on an advisory plan, keeping our clients up to date with market conditions, but also advising them on restructuring balance sheets, etc., and trying to be ahead of the game. Not too easy, of course, with the volatility, but generally it's worked very well.
And in terms of the coming year, obviously a lot of uncertainty, but where do you expect the best opportunities to be for BNP Paribas?
I think generally across the markets, business models are under review. I think what is very clear to me is that volatility will continue, and one has to really focus on what one's client want. From our perspective, we see a lot of business from our clients in the foreign exchange markets. We expect disintermediation to really gather pace in Europe, so many more clients in Europe coming to the bond markets rather than the bank markets. We expect clients to do hedging in both interest rate and FX markets. So it'll be very client friendly and facing in what is undoubtedly a very challenging regulatory environment. And that will be the key driving force for us going ahead, how to manage new regulations, especially in terms of capital and liquidity, and really steer our way through what is potentially quite a nasty minefield. But understanding clients, finding solutions for clients, then executing those ideas will be critical.
Well, Martin, many congratulations again on the award, and thank you very much for your
Thank you very much.
The most innovative investment bank from North America. Shortlisted, we've got two houses, Morgan Stanley and JP Morgan. I think we've got a fourth-time winner. It's Bank of America Merrill Lynch.
I'm here with the President of Europe for Bank of America Merrill Lynch, Jonathan Moulds. Welcome.
Thank you very much.
And Bank of America Merrill Lynch are our winner of the Best Bank from the Americas. I think one of the things that the judges were impressed by is how you've handled the integration between Bank of America and Merrill Lynch. Can you tell us a little bit about how it's unfolded and some of the big markers in terms of putting it all together?
Absolutely. Well, firstly, delighted to be here. I would say, actually, if you look at the progress that we've made since the merger, we've come a long way, and it's been a pretty intense period of time. I think the thing that we feel very good about is you take two very complex organizations, large complex organizations, both extremely strong in their own respective fields, and you add the sort of the product depth of Merrill Lynch to the corporate banking, the strength of balance sheet, the retail franchise of Bank of America. And if you can make the integration work, you have a true powerhouse. And so, as I say, in terms of getting the full benefits, this is a multi-year project, but in terms of what we've achieved to date, I think we feel we've come a long way. And if you look at, specifically in terms of investment banking, and for that matter, corporate banking as well, you'll see that from an investment banking perspective, for the last 3 years, we've been one or two, one of the top two out there. And I think so soon after merger, with a lot of the synergy, a lot of the lift still to realize.
That's quite an achievement.
We've come a long way. And again, if you look at the individual product rankings, whether it be financial sponsors, asset-backed securities, leveraged finance, from a US perspective, we're dominant, absolutely dominant. And so our challenge and the exciting part of what we do is to expand that outside the US, and that's what we're in the process of doing.
Okay, now one of the things that we focus on with the Bankers Awards particularly is innovation.
Absolutely.
Sometimes it's quite difficult to get innovation in a big house.
Sure.
So how do you manage to keep that sort of entrepreneurial spirit alive when you've got such a big house to look after?
Well, it's interesting, as I talk to people about joining our platform, and we've made some tremendous hires across Asia, across Europe, Middle East, Latin America and the US, so we've really strengthened the platform. But one of my big selling points to people is I think this is perhaps the only platform that is very close to critical mass. In many areas we are at critical mass, where you can actually come in and make a transformational difference. And so we're able with that to attract some really good quality talent. And therefore, if you look at where we've been able to take the platform, even if you look at EMEA, so this region, then in investment banking, we think we've got a tremendous amount more to achieve, but we're well now within the top 10, very close to the top 5 if you look at this year, and that's a big step forward. The other thing that I do think makes sense from an innovation perspective is you have to have the structure right. And one of the things that we have done in the banking world, we have combined corporate and investment banking, put 3 people in charge globally, Christian Meissner, Paul D'Onofrio, Michael Rubinoff, and that has really helped drive the synergies to lift the client prioritization, which makes a tremendous difference.
Okay, so you're all set to carry on with this exciting work. But I mean, let's face it, the markets out there are extremely volatile, extremely gloomy. So, but this is an awards ceremony, so we want to be kind of upbeat. So can you try and give us some sort of blue skies on the horizon, areas of the world and areas of the business that you think will be positive in the months ahead?
Well, clearly it's a challenging macro environment. It's a particularly challenging macro environment in Europe. Although having said that, I think we do feel that the strong universal banks, well-run universal banks, can really take market share, can really capitalize on their product depth, their balance sheet, and the strength of the product offering, and actually get a real lift. So as I say, from our side, we know it's work in progress. We've come a long way in a couple of years, but we know we've got quite a long way further to go. So that's the exciting part. So as I say, we look forward to the future, and we're pretty optimistic that in terms of Bank of America Merrill Lynch, we can make some strides forward. So I would love to be standing here with you next year, instead of 4 awards, maybe the same awards or different awards. We're pretty sure that we can make some real progress.
Okay, well, we'll look forward to having you back next year then.
Great.
Thank you very much.
Right. Delighted. Thank you very much.
Ladies and gentlemen, the winner of the most innovative investment bank of the year 2011 is Deutsche Bank. Ladies and gentlemen, I think you'll agree that this is an opportunity to break with precedent. I'm going to ask Anshu Jain if you would say a few words to us, please.
Thank you, Michael, and these will be very few words. Thank you, Brian. Thank you to the panel of judges that have given us this award. On behalf of my team at Deutsche Bank, over the last year, we've been working hard at putting our corporate finance and our sales and trading businesses together and really, truly integrating our investment banking platform. So it's terrific to be recognized. Thank you. With all my peers in the industry here, and it's terrific to see so many friends, I think it wouldn't be off for me to just cast a broader eye on the context. It's been a tough 3 or 4 years. No doubt about that. Between the macro challenges, and Europe definitely represents the worst of them, the threat to our business model, the scrutiny over regulation, the changes to capital, there's been no dearth of challenges that we've been facing. And in fact, a lot of our young talent walks in and asks me if this is indeed something which they should still be doing. And I think the best thing I can do today is to truly say that despite all of these challenges, and I've been doing this now for almost 3 decades, scarily, the talent in our industry and the core need for what we do is so significant that once we come through this, and it could take a little bit of time, I'm convinced we'll be the better for it, and the future for our industry remains very, very strong. Thank you very much again.